Well, good evening, everybody, and welcome back to Strongman Personal Finance. We're going to cover our one ticket to the promised land, a stock that could take us from our poverty, our loserdom, our inkwelldom to uncalculable wealth. Opendoor. Let's dive right into this amazing company that has been on an absolute tear. So, Opendoor Technologies is a very simple business, okay? If you're desperate to sell your home and you want to make it really easy, you can go onto this website and you can sell your home directly to this website without having to go through a real estate agent, blah, 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 blah. So what Opendoor does is they buy homes and then they sell them. Pretty simple, huh? It's kind of like it's almost like a Carvana of real estate. Okay. You get everything's online, everything's digital, super easy, bro. So the stock is becoming very popular because it's now at a $7.51 billion market cap. And over the past 5 years, it's only down 35%. Now, the stock absolutely collapsed. So we had the cloud market. We had a huge, massive rally in the stock. And then once interest rates went up and the housing market seized up, the stock absolutely imploded. Okay. And now, over the past year, the stock is up 328%. Now, it could partially be because of memetics, because every stock seems to be a freaking meme stock nowadays, at least small companies. Could partially be that, or it could be hopes and expectations that the housing market is going to recover. Because if there's tons of home transactions because rates come down and home prices are going up and Opendoor can continually buy and sell homes at a profit, they can make more money because there's more transactions and every transaction generates a profit, right? That's what people are partially guessing on. It's partially meme and that's partially a play. So if we go look at the financials over time, we're going to look at their most recent quarterly report. We can see that their revenue absolutely collapsed because the housing market absolutely collapsed. This is intimately tied to the housing market. If you think the housing market is going to recover, there's going to be more transactions, and you think Opendoor can continue to generate profits and churn, the stock will probably make a bunch of profits. But you can see that revenue's all over the place. They had a massive explosion during the cloud market. And then rates went up and the stock absolutely imploded. And now you might think, whoa, rates are coming down. Therefore, the stock is going to go back up. That's possible. But you also have to wonder, are long-term rates really going to come down? I don't know. That's kind of the guesswork behind this stock because long-term rates are intimately tied to mortgage rates. If long-term 10-year, 30-year yields are higher, that means mortgage rates are going to be higher because you can either, as a bank, you can either invest in a treasury or you can take the risk of issuing a mortgage. And why would you collect less interest from a mortgage or the same interest from a mortgage from somebody that could default when you could just buy a treasury? So usually mortgage rates should be theoretically higher than the 10-year rate. So we can see revenues all over the place. And if we go look at profits, okay, gross margin has been a little bit of an issue. So the gross margin is their profit from buying and selling the homes. They're just churning homes. They obviously try to gouge people as much as possible. They try to get the home for the lowest freaking price. And if you use them, you probably aren't getting a good deal. Okay, you kind of have to be desperate, in my humble opinion, to use this freaking website. You almost know they're going to grift you. Okay, I need to actually test it out and see how much they're going to offer for my house. But their gross margin was obviously a little bit better back in the beginning of the cloud market, and it's since stabilized around 8%. So they're making about 8% profit per home. But if you think about the number of if transactions increase, even if their margins stay the same, they can generate a lot more profits. Operating margin, they've basically had losses every single freaking quarter. And profit margin, they've had losses. Free cash flow margin, I mean, it's all over the freaking place, okay? So that's the current status of Opendoor. Now, let's look at the housing market. So I have the S&P CoreLogic Case-Shiller U.S. National Home Price Index, which kind of looks at where home prices are going. So this is the home price index from 2020 all the way to 2025. So we see a rapid increase in home prices. Okay, so even a clown could make money in this market. So obviously, Opendoor, if they were buying homes, desperate people sell their homes down here in 2020 and 2021, and home prices start to go up, well, they're going to make a profit. okay, because the market's going crazy. And now you see the market start to stabilize, and you actually saw right around, mid to late 2022, the home price index actually went down and Opendoor started to have trouble. And slowly but surely, home prices have slowly worked their way up, but there's not an explosive growth in home prices. So you really have to guess. This is what the stock's all about. Do you think home prices are going to go up massively or quickly? And do you think Opendoor actually has the capacity to capitalize on that? I don't know. I'm a little concerned that home prices might actually come down. I've seen lots of information that makes me a little bit concerned about the housing market. We could potentially be in a housing bubble. It's possible. And sometimes home prices do go down. Let's see if we can actually pull this up. Look all the way back in during the great financial crisis. So if you look around 2006, the index topped out at about 184, right? The baseline is probably back in I don't know where they set the baseline, probably in the 2000s or something, or late 1990s. But you can see the index topped at about 184, and then it utterly collapsed all the way down until December 2021. So Opendoor's business is to buy homes as cheap as they can and then sell them. But if housing prices start to go down and down and down, how are they going to make money? Because they're buying, let's say they buy a home now, and then the market drops 10%. How are they going to make money? They have to really, really gouge people or be really good at deal making. Okay. I don't know if they're good at it or not, but that's kind of the concept there. So you got to really understand the housing market to understand this company. And I'm not saying I'm an expert in the housing market. I mean, I have a home, but I'm just one person. You really got to understand what you're investing in, and don't worry about the freaking memetics behind this. Okay. So if you think you have a good handle on the housing market, maybe you consider buying this stock. So let's see. There was a good chart here. So look at this. This is the Kobasi letter, however you freaking say it. Breaking, there are now record 312,000 new homes for sale in the southern United States. This is 21,000 higher than the August 2006 peak, just before the housing market crash. If the housing market crashes, if prices go down, Opendoor's in trouble. Okay. Big trouble. The number of new homes for sale in the South was almost half of what it is now during the 2020 pandemic. Meanwhile, new homes for sale in the West have risen over 40,000 to 111,000, near the highest level since 2008. So you can see this is U.S. inventory of new homes. We got the South here. Okay, this is probably like Florida and maybe Texas. I don't know about how Virginia's doing that. I live in the South, technically. But you can see that the South is really getting freaking hammered, and there's a lot of homes just sitting in inventory. So imagine you're trying to sell your home and you can't sell it. What are you going to do? Oh, I'm going to raise prices. No, if the buyers aren't buying and your home's just sitting there in inventory, what are you going to do? You're probably going to lower the prices. Okay. And there's an interesting account called Darth Powell. I've trolled him a little bit, but not too bad. But go check out Darth Powell on X. And he actually, I'm pretty sure he thinks we're in a massive housing bubble and that the real estate market's cooked. And if you're an Opendoor and the real estate market collapses, I don't know what to say. You're going to be in deep crap. Okay. So we can go look at their most recent earnings. Let's see. We're going to look at trends over time. Okay. So we could see that revenue in the most recent quarter was 1.5 billion with a gross profit of 128 and a gross margin of 8.2%. And they generated a net loss. Now, they sold in June 30th, 2025, 4,299 homes. I don't know if that's in millions, except percentages homes sold, number of market. Okay, I think this is just homes. Okay. Anyway, 4.3, whatever the freaking denomination is. I think it's 4,299. So they've sold 4,299. So they're selling more homes. If you look at the last couple of quarters, the home sales didn't even get close to that. So they had a little bit of a better quarter. However, look at the homes purchased. 1,757. The prior quarter, they purchased 3,600. And if you go back, they were buying way more homes over the last couple of quarters. They've really slowed down the number of homes they've purchased. And their inventory, their homes in inventory at the period end is like 2 or 3,000 lower than it's been before. Okay. So it's almost like they're having trouble buying homes, or maybe they're not seeing deals, or maybe they're worried about the market collapsing. Okay. And look at this percentage of homes on the market for greater than 120 days, 36%. Okay. So they're winding down their inventory. They're not really buying that many new homes relative to prior quarters. That should be a little bit concerning to you. Okay. So I don't know, man. This is just a gamble on the housing market. I don't know what else to freaking tell you. I mean, look at the drop in inventory. They're sitting tight. Okay. What do they have? $789 million of cash. And let's see, non-recourse asset-backed debt. So basically what Opendoor does is they borrow money to buy these homes. And the idea is you want to sell the home as fast as possible, so you're not worrying about paying the interest on that financing. So if they are packing on a lot of debt and they're not really selling homes, that's going to eat into their profits because they're going to have higher interest expense. And you can see the non-recourse asset-backed debt, the current portion is $550 million, it looks like. Yep, $550 million. But their inventory is $1.53 billion. The prior year, December 31st, 2024, they had $432 million of debt, but they had more inventory. So they're actually paying higher interest, unless they somehow got lower rates, for a lower amount of inventory on the books. So I don't know what to say, man. This is a big risk. Okay. The last thing I noticed about housing or operating cash flow, they generated positive operating cash flow over the last 6 months because they basically dumped a bunch of inventory, didn't buy a bunch of new inventory. So I don't know if this portends something bad coming in the future, that their homes and inventory have dropped pretty precipitously and they're not really buying any new homes. It's almost like they're having problems finding deals, or maybe they're concerned about the housing market imploding. And if that's the case, how are they going to make money? If they have these homes and they're just sitting there, what are they going to do? If home prices start to implode and go down and down and down and down, they're cooked. Okay, this company relies on freaking homes going up in price, number one, or gouging people. That's really the only way they can make money. If they can convince desperate people to really sell their homes cheap, they could still potentially make profit even in like a down market. But they're going to have a much harder time making a profit in a bear market, home price bear market, than in a market like we had in 2021 where home prices were going freaking ballistic. Okay. So that's my thoughts on Opendoor. Very freaking risky. But of course, everybody's piling in now because, oh, bro, it's up 328%. Time to get in, bro. Okay, look at this article. Opendoor rallies on expansion and short squeeze hopes. What is the short? Do they say the short percentage on here? I wonder if they freaking do that. That'd be funny. I don't think it does say on here, but that'd be very interesting to see how shorted this company is. Because usually when you see a company that's heavily shorted, guess what? Cooked. It's a piece of garbage. Okay. All right, let's do some comments. All right, we're doing member-only comments. If you're not a member, I'm not answering your comment. Oh, look, it's the stock that traded on Yahoo Finance for 40 of the past 50 trading days. I know it went up a lot. It's very popular. Opendoor has AI. It's a buy. Oh, never mind. I disregard everything I said. Wow, it went up. Obvious buy signal. I would not buy this stock. I mean, this is like a gamble stock. This is not I'm going all in, bro. Pay pigs. What's up, man? Bullish because real estate agents are like finfluencers and they only, oh, God. Opendoor, the back door. We know real estate prices always go up. Buy shares before it shoots to. That's true. That's what they said in 2006, bruh. How long before a recession forces Opendoor to close its doors? Well, they got lucky. Cloud market bailed them out once again. How does one make losses with a website? Well, you make losses by buying a bunch of homes with debt and then having a hard time selling them. Or you're in a real estate bear market and you got to sell the houses for very low profits or even losses. I think they recorded like a negative gross margin one quarter. And that's because they probably wrote down their homes. That could happen again. They're democratizing home buying. Oh, if they say they're democratizing home buying, run away. Capitalism, bro. And there were a couple other companies in this business, but they got out of it. Okay. Because they were getting clapped. Gotta love a company predicted to lose dollars in 2027. LOL. Hey, bro. The housing market's going to come roaring back. It's like a stock. Stock goes down, buy the dip at vertical lines. Housing market has trouble, buy the dip, vertical lines. That's how it works. Far style against the dollar. I ain't shorting anything. I never even heard of this company ever since the Zillow. Oh, I've heard of it. It's all over the freaking YouTube finance. Do dividends so immediate. No dividends so immediate garbage. Yeah. All right, guys, that's it. Like, subscribe, consider joining us a member. I only answer member comments. You can also get sponsored videos. You see the pinned comment, you click on the link. There's a description. You send me $50. I cover whatever topic you want me to cover or react to a video that's reasonably short. Also, consider booking a free 30-minute tax consultation with me. I am a certified public accountant, and I will gladly do your business and or personal taxes any state in the United States. You can talk to me for free with a 30-minute free initial consultation. I'll give you an upfront fixed quote for your tax preparation or any other services I may provide, and then I'll do your taxes like an absolute boss. Like, subscribe, and I'll see you in the next stream. Cheers!